President Trump has sparked another round in the trade war with a fresh wave of tariff threats, new letters, and a hard August 1st deadline. So, what's changed since Liberation Day? And why is Asia on high alert again? Let's break it down. Back in early July, the 90-day pause on reciprocal tariffs was supposed to expire. But instead of letting the clock run out, Trump extended the deadline to August 1st, giving the world just 3 more weeks. The twist? He publicly claimed there would be no exceptions. But reality speaks differently. Letters were issued to 14 of America's trading partners, 9 of them in Asia, laying out new tariffs ranging from 25% to 40%. These weren't friendly memos. They came with a stern warning that any retaliation would be met with even steeper tariffs. This marked what markets now call Letter Day, effectively resetting the game back to Liberation Day. Asia in particular has been hit hard. Only Cambodia, Bangladesh and Laos got lower rates than in July, but even those are still punishing at 35 to 40%. Everyone else? Either higher or unchanged tariffs. The message is clear. Trump's frustration is growing, especially with stalled negotiations with Japan, Korea, Thailand and Malaysia. And it's not just about trading balances anymore, it's about transshipment. Goods rerouted through third countries, especially those linked to China, will now face additional tariffs. The ripple effects go far beyond Asia. Trump has also threatened a new 10% tariff on countries aligned with the BRICS, which now includes not just China and Russia, but also Saudi Arabia, the UAE and Egypt. And while the European Union hasn't received a letter yet, officials there warned that they are ready to retaliate if a fair deal isn't reached. Let's not forget, sector-specific tariffs are on the table too. We are talking about industries like autos, semiconductors, trucks, pharma, and critical minerals. For economies like Taiwan, South Korea, and Japan, these are critical sectors and they are not exposed to serious disruptions. So, how have markets reacted? Despite the tariff threats, Wall Street isn't panicking. In fact, the S&P 500 is up over 6% year to date. Why? Because even though the tariff policy has created large uncertainty, optimism is being driven by the fundamental strength of megacap stocks, growing hopes for earlier and deeper Fed rate cuts, and the resilience of corporate earnings. Now, banks like Barclays and HSBC say markets may have already priced in the worst, and the bar for earnings is low enough that even modest surprises could lift sentiment. Tech giants, the so-called Magnificent Seven, continue to dominate with strong overseas revenue benefiting from the weaker dollar. Singapore, India and the Philippines may gain competitive edge if they secure exceptions or deals, while according to Citi, S&P 500 earnings could still grow by 4.5% year-over-year, with megacaps accounting for nearly half of that growth. But let's be clear, not every sector is celebrating. Energy stocks are still under pressure, hit by the drop in oil prices this year. The real test comes during the second quarter earnings season. Key questions traders will be asking: will companies absorb the tariffs or pass them to consumers? So what's the takeaway? Yes, tariffs are rising, yes, Trump is turning up the pressure, and yes, uncertainty remains high. But for now, Wall Street seems to believe we are past the peak of tariffs panic. Markets are betting on resilient corporate profits, Fed support, and quite frankly, a belief that Trump's threats may not be fully materialized. Still, traders should stay alert. August 1st is a key day. Sector-specific tariffs are likely coming, and geopolitical crosswinds from BRICS to oil flows to European retaliation could shake up things really quickly. The tariffs roller coaster isn't over. But for now, markets are keeping their hands on the rails and eyes on earnings. So the message is clear. The tariff clock is ticking again. Weak countries fold, fight back, or find a deal. We will be watching closely as Liberation Day 2 approaches on August 1st. Follow us for more insights as the trade saga unfolds and stay ahead of the market.